Well, it was really unprecedented, which is a word that's been way overused since the start of 2020, but just experience with the coronavirus pandemic. It's no surprise that the market did decline as much as it did. I think what probably did surprise a number of investors was how quickly the market rebounded from that low. So, how do we explain that? I mean, I think that there were really two main factors that we should look at. And the first is that the panic that was enveloping the market in March subsided. I think what's even more important was the government acted quite quickly with a $2 trillion stimulus bill. And so I think that that was also probably the most significant factor in driving the turnaround in the stock market, along with the actions taken by the Federal Reserve, such as rate cuts, reserve ratio reductions. It was obviously a very difficult environment for investors in the first quarter. I mean, who's used to seeing the market go down 9% in a day? And in that sort of environment, it's not surprising that some people have the reaction that I just want to cut and run. I don't know what's happening here. I have to protect myself. And the one piece of advice that we have given consistently over the years is that your best course of action is to remain invested. It may be that the market rolls over. We've seen an increase in coronavirus cases and through large swaths of the country, and that's again having an economic effect. But it's also entirely possible that the government decides they need to do another stimulus bill, and so we continue to stand by our probably single most consistent piece of advice that your best option is to remain invested.
The first quarter we saw a considerable breakdown in the markets. And usually when that happens, there's always a debate on whether or not you're going to get a V-shaped recovery, a W-shaped recovery, or an L-shaped recovery. And sometimes the economy acts differently than the market does. And I think at least for the second quarter this year, the V camp definitely won. A lot of people are saying it's because of the amount of money that was pumped in by the Federal Reserve. Congress passed a $2 trillion tax relief CARES Act. But also, I think one of the things we can't discount is the fact that a lot of people are staying home. They did get a stimulus check, and they're using that money to be able to put into the market.
The first 6 months of 2020 has probably been the most dynamic and volatile investment period throughout my career. We've had this massive V-shaped type of downdraft followed by a whipsaw on the upside. And it really speaks into the importance for investors not to try to time the market, but rather it's time in the market that matters.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting www.amanafunds.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information which you should carefully consider before investing about the Amana funds in a free prospectus or summary prospectus, please visit www.amanafunds.com or call 1-800-728-8762.